Sam here, and we're going to be doing the weekly stock review. Be sure to stick around to the very end of the video because I'm going to have three stocks that I'm looking at that I think have really interesting and potentially explosive setups on all three. So we're going to cover that towards the end of the video. Let's dive in here where we usually start. We're going to start with the indexes. Also, it is end of month, so we might have a chance to look at some monthly squeezes that I have my eye on and see how those monthly candles have closed before we enter September next week. So let's start here with SPY. So another week is in the books here on SPY, and I don't really see any major changes. You are getting a little bit of friction up here where the candles are kind of just stuck in limbo. They continue to step over the same ground. We're kind of stepping over the same ground that we were at just 2 weeks ago, essentially not really getting any lift away from this level. Arguably, you could even say that this is a false breakout, and that is definitely a point of concern. So if you just look at the total score here, the scores are maxed out. They are max bulls on both the weekly and the daily time frame. But if we kind of parse the available information here, this is, at least as of right now, a potential false breakout bull trap as long as it holds below basically last week's high. So be very careful on that one. I get that it is max bull, and I would continue to treat it as such, frankly, but just a little bit of a minor issue there that could develop into something more if we're not on guard for that. This is the second week in a row that you've gotten a taper here in the squeeze histogram. You can see that now you have two blue bars against the grain. This starts to then open up the door for a retest of the 21, kind of similar to this back here, where you went into a decline in the histogram. Price went up a little bit more and then kind of had a big flush into the top of the cloud, which is the 21. So that is something to keep an eye on, out for. And I think maybe that could even come into play as soon as September. Ideally not early September, but ideally kind of late, kind of third week of September would be a little bit more friendly. But we'll see what Mr. Market has in store for us there. Let's go to the QQQ. The QQQ is a little bit interesting because last week we talked about the barbell approach that I was looking at. So on one end of the barbell was all of the IWM stuff. And basically when I say IWM, it's just kind of a shortcut way of saying everything that's not tech. And then on the other end of the barbell was the Mag 7. And let's see how this guy closed. So this looks to be the third consecutive weekly lower close. So far, it's all within reasonable ranges, I suppose. You're still kind of stuck in the weeds here in this range from about 50 to about 80 or so. So third week in a row that you have a lower close. This one does not have a false breakout, but I suppose from this little bit of structure it actually does. Because you had a little bit of a mini bull flag there that broke out yesterday and then basically totally failed today. So aside from that, I don't really see anything else too much here. I think that if it starts to get below 67, which is the kind of a combination zone of support that I have, 67 to about 69-ish, I would look for some potential issues, but at least for now you have kind of just a neutral structure and not a lot of additional information on the QQQ. I've been trying my best to avoid things in the QQQ outside of the Mag 7, and so far I think it's been a relatively good idea. Although one of the stocks that I'm going to bring you towards the end of the session is definitely tech related. So this is kind of where we wanted to focus coming into this week, and the IWM here continues to print some of the better signals out there. This one actually does have a confirmed breakout, a little bit of a kind of a spinner top candle there, not a real big deal. to speak of. You are now getting a histogram against the grain, so not fantastic. And really, the only major issue that I see here, if I can even say that, is just that you are a little bit away from support, right, at this point. But the IWM has been a part of the market that will be short squeezing, so the need to pull back into support and trade like the S&Ps would without all the short interest is less, because here you actually don't want it to pull back because you want to keep the shorts basically on their heels, and this is the type of price action that will do that. So I don't really see a ton here on the IWM to change or to do. It's a little bit in no man's land, so I'm not even entirely sure what price I would want to buy it. I would absolutely be a buyer at the daily 21, and I would consider being a buyer at the daily 10 EMA, but we're not really near those prices at the moment. So let's move over to the credit spreads, which we look at through HYG. And as always, just a quick disclaimer, we look at HYG as a function of risk appetite. So if HYG is moving higher, that means that junk bond spreads are getting tighter, and that is a bullish phenomenon that we see. So as it sits, no major issues. It looks a lot like the IWM with a little bit of that kind of spinner top candle after last week's big move up. Very similar to IWM, and actually it makes a lot of sense because HYG and IWM are kind of, well, they're two sides of the same coin. So as long as HYG here continues to stay stable to up, I would definitely continue to look at IWM as the primary focus, primarily because of this dynamic as well as the dynamic around the potential for a short squeeze. So mechanically speaking, the IWM has all the juice, and the one that would be a little bit suspect would be actually the NASDAQ. So that's the HYG. Let's move over to the VIX land. And VIX here actually had a little bit of a breather higher, and it looks like it actually will end the week with a positive week relative to last week. And let's see if I see anything here. Not really. If it gets above 16, I think it could start being a problem. And to be fair, the VIX right around 15 to 14, in my opinion, is rather low. But it really isn't a major issue until it gets above 16. So as long as the VIX is between 16 and 14, there's not going to be very many major issues to glean from this. So for now, we'll just move forward. If we check out the VVIX, which is the VIX of the VIX, and it tends to move sometimes in front of the VIX, oftentimes actually. This one's a little bit more kind of spunky here, and I think that if it were to get and hold above 101 on the daily time frame, 101, 102, that would create a problem. So why don't I do this? As long as I'm here, and I suggest maybe you consider doing something similar, is I'm going to leave an alert here on my VVIX chart at 102, and then that way I don't have to watch it, and if at any point the VVIX next week ends up above 102, I know to be a little bit more cautious. So let's do this, because we did it last week and it was such a big hit. Let's check out our sectors all at once. Actually, you know what? Let's go back here for a second before we go to the sector work, and then we'll finish with the three stocks that I think have a pretty explosive setup. So I wanted to see this monthly squeeze on IWM because I'd like to believe that there's a blow off top in IWM, and that will be catalyzed by this monthly squeeze. So the last time that you had a monthly squeeze with arrows was right back here And you can see that once the candle goes blue, blue is an improvement from gray, and then of course a green is an improvement from blue. You get a big move up. This time it went right from green to dark blue, which is quite strong. And you actually have a very good looking monthly squeeze here. So I'd like to believe that, the IWM here off of this setup, barring something very naughty happening soon, I'm looking for like at least the previous high at 245 with a potential for about 267 and then a potential higher target after that. But I think that would at least covers us for this video. So I just wanted to show you this one because it does have a rather large monthly squeeze on it. And you can see for yourself there in the top left-hand corner, it is of the Max Bull variety. So those are going to be definitely worth playing and knowing about. So let's go back here and let's just look at the sectors and see how everything's lining up and see if things still make sense or not. So let's actually start with the indexes and then we'll go to the sector work. And this will tell us where to focus. So we start with the indexes because if the indexes don't look good, then that colors our opinion about everything else. And if the indexes look good, then we can proceed to the sectors and say, okay, well, the city, in this case, the city being the index, is good. Why don't I look for a nice neighborhood? That would be the sector. And then inside of the sector, I can look for a nice house, right? So city, neighborhood, specific house. If you get my drift there, index, sector, and stock. So the indexes here, I mean, they're still pretty damn good, right? That's not a bad score. NASDAQ, a little bit behind. The Dow is still a max bull. The RUD is still a max bull. Keep an eye on China. I know that they've had a rather large run, but I think that they actually have room to go, and the sentiment around them has been rather negative. So what stands out here? And really the same thing that stood out last week stands out this week. So let's ignore Germany, because I don't know how much information we can really pull from Germany, although it is a good proxy for Europe in general. And ask yourself, where do you see something that stands out here that's different? And last week we said that this stood out as something that's different, but not in a good way, right? So that's the QQQE. And the problem here with the QQQE, actually, you can look at these two charts here. The one on the left, this is the Mag 7 index. The one on the right is the QQQE. The QQQE is the one that is equal weight. So while the Mag 7 and frankly the NASDAQ at this point is dominated by Mag 7 stocks, Nvidia, Amazon, Apple, Microsoft, the QQQE looks at everything as just one thing, right? So Nvidia doesn't have this wildly disproportionate effect on the QQQE. And so to put a point on it, my interpretation of this chart is basically as a breadth reading for the NASDAQ. And this tells me that the breadth inside of the NASDAQ is poor relative to the breadth outside of the NASDAQ, which is the RSP. Right? So hopefully this comes across as to what I'm doing here in terms of using these equal weighted indexes as breadth readings. While not specifically breadth readings, I think they actually facilitate the view of a breadth reading. And this just further confirms to me that I do not want to be in tech outside of the Mag 7, because until I start to see that equal weight QQQ improve, that tells me that that's kind of the worst neighborhood available to me. So right away we have some color to our point of view. And then let's go to all sectors here. And you can see that the difference is becoming rather apparent in terms of how the sectors are stacking up here. You're starting to see a lot more blues, a little bit of grays. There are certainly a lot of green as well, but definitely more of a mixed picture here. I think that utilities might actually be setting up for a short on any kickback. This squeeze is really, really heavy, and you can see that the candles have gone from green to blue, and as of today, the blue has turned into gray. So you can see that's kind of a weakening of the structure. But if we focus on where there's strength, surprisingly to me, there's a lot of strength in the home builders. Max Bull, I figured there would be some strength, but I didn't know if they were that strong. Semiconductors are still okay, but not as strong as the index. Healthcare is improving, but still weak. Weakness here in the defensive parts of the market, which is interesting. A little bit of weakness here in industrials. Financials remain solid, and XLK remains okay. So nothing super stands out here. I would say that if the readings are true and the market isn't short here, then something like ARC is probably the best bet to play that as a short. Does that make sense as to why? We started with the big picture, which was the indexes. We said everything looks pretty good. The one thing that was a standout, and not in a good way, was the equal weight QQQ. That tells me that basically the QQQ is being propped up by the big heavy weights, which is the Mag 7, and everything underneath that is deteriorating significantly. Therefore, if we're going to play something to the downside, where I'm seeing the most amount of edge in doing so, again, you'd need the indexes to break short if this is any good, but I'm seeing a short here in ARC, completely dependent on if the indexes facilitate that. So that's a key part. And I'm not long, I'm not short ARC. So I am long Tesla, which is, a good chunk of ARC, so I'd prefer this not to play out. But, to throw meat to both sides of the market here, most things still look bullish to me. I don't have a reason to believe that they're not quite just yet, at least not strong enough reasons. I don't love the false breakout on the SPY. That's certainly an issue. There's a false breakout on the QQQ. That's certainly an issue. The rotation out of tech and into energy, for example, is not usually good for the index, so that's an issue. So if any of these start to then become bigger issues next week, I know right away, if I want to play a short, I'm going to go hit ARC and Miss Kathy Wood, based on everything that we've just looked at. So with that sector work out of the way, and hopefully you made a mental note there as to the process that we just followed, let me show you 3 things that I'm looking at, the teaser from the beginning of the video. Before I do, I'd like to ask that you leave us a like or a comment, or ideally both, as my mom judges how good she raised me based on the number of likes that I get. And if I don't get enough likes, she thinks she did a bad job. So I would certainly appreciate it. So first up is Rocket Lab. And we've had a little bit of fun in both directions on Rocket Lab in the room. But we're back in it. We bought it yesterday. I bought a little bit more today when it was down. And I'm looking for a big move here in Rocket Lab. You have a bull score here. And there's a dynamic here that's played out that's very interesting. So the charts that I'm going to bring you here, aside from maybe the third one, these are not necessarily conventionally easy setups. So, and I didn't want to bring you something that's conventionally easy necessarily, just because, something like Goldman or Citi, I think, is conventionally easy. Yesterday we got out of RTX, Raytheon. I thought that was conventionally easy. These are a little bit more of a eclectic group. So with Rocket Lab here, you see how you had this base here that I'm drawing in at 42, and you broke below it, right? So a lot of folks are going to have stops right here at 42. You trade below it for 2 or 3 days, and then on the third day, you actually pop back above, and now you're kind of holding above this falling trend line here as well. See that? Also today, just the relative action, right? The NASDAQ was getting smacked up all day, and Rocket Lab closed decently green. So that's a pretty good sign of internal strength. This has come a long way. You can see that the daily squeeze here certainly looks proper at this point, and it actually has a 2-day squeeze on the back. So the way that I'm playing this in the room is with the $46 calls. We bought those at $4 yesterday, and those are going to be for the monthly September expiration. The 46 calls for September monthly is how I'm playing Rocket Lab. Next up is going to be Carvana. And I sure hope Carvana doesn't let me down. I've been telling the folks in the room, the only thing I don't like about Carvana is how much I like Carvana. And that's always a problem. You don't want to like a stock too much. And it's not even the stock itself, it's just the setup. I really, really like the setup. But this one, you know, full disclosure, this one could end up being one of those weird ones that lands in the middle, right? Because I just told you that the barbell, on one end of the barbell is IWM, on the other end of the barbell is Mag 7, and Carvana isn't necessarily either one of those things. So this one could end up being a little funky, but I want to bring it to you because it's got a cool setup, and I'm in it. So I'll tell you my trade here in just a second after I describe the setup. So here, kind of the same thing, right? You see the undercut there. There's an undercut here, right? So this candle kind of serves as a dual purpose undercut. But I want to draw your attention to the squeeze, because you see how the squeeze was forming, the red dots are forming in a downward formation, right? The squeeze histogram is, it's looking like it's going to fire short, and then, you know, you get this reversal day here, which triggered an arrow, which we'll talk about, and then you start to reverse the setup to the upside. So essentially, you build a squeeze in a negative histogram with red bars. The squeeze does not fire. The bars start to turn, and now the bar as of today is actually up in the positive zone. So that would be considered a slingshot squeeze. You pull it back, and then you snap it forward. So that's one input, and then the second input is the dynamic right here. So you see that white arrow, and then you see how it has a green arrow right next to it, right, that triggered on that bar right there. That is bull slingshot. So essentially, it creates a very similar dynamic to a squeeze without compression, meaning that you'll get like a bigger than expected move, typically, if you have bull slingshot. So somewhat of an uncommon pattern. You don't see this very often where you have a slingshot squeeze and a bull slingshot on the high-low pro. But I thought it was interesting enough. And of course, you know, it's got green bars here for the first time and high short interest and a pretty good score. So I'm playing this one through the 360, 380 verticals for September monthly, and I posted about it on my Twitter. If you want to see a photo of it, I will include my Twitter link in the description. And if you happen to be on Twitter, give me a follow and give me a like, because again, my mama won't cook me supper if I don't get likes. Her words, not mine. So help feed your boy by clicking that like button and the subscribe button. Alright, so then the big one. Big man on campus here. Gold. So I was a little bit on the edge on gold because it is my biggest position. And for those of you in the room, I made a pretty funny mistake yesterday of turning my broken wing butterflies into standard butterflies. So if I could go back, I certainly wouldn't do that after a $3 move to the upside. Gold here is at the top of the range, but here's the thing. This is now setting up for a breakout, right? So I told you I was going to bring you 3 explosive things. 2 of them are explosive for the reasons that we talked about, kind of the whipsaw effect on Rocket Lab, the slingshot effect on Carvana, but gold here is just kind of consolidating in a range with a traditional kind of breakout pattern, right? So you have a big move up, consolidate in kind of a flagging pattern, clean top here right around 318, and of course big weekly squeeze to go along with it. So do I want to chase gold here exactly at 318 next week? Probably not, but definitely keep it as a pullback buy. I think that if gold here, you know, breaks out in earnest, I've got a 325 target on it, minimum, with a potential to get into about 330. So you can see all roads there kind of lead to about 325 or so. And that could happen pretty quickly. So I'd be a buyer of gold on a pullback and be looking for that 325 target. All right, folks, that's my time. Thanks as always for watching the video. We'll catch you next week. Cheers.